Hello everyone, and welcome to Trading Club 7. I'm your lead educator for today's lesson, and I'm excited to help you improve your trading skills. Today, we're going to explore one of the most powerful chart patterns that can increase your trading confidence and accuracy, and that is the double top and double bottom. Let's start with a simple explanation. A double top is a chart pattern where a security reaches a high price level, pulls back, then makes a higher high, and finally falls back below the previous high, creating a second top. This pattern suggests that the security's price trend has exhausted and is now due for a reversal down. To make it more visually clear, imagine you're climbing a big hill. You reach the top, but then, you slide all the way back down. That's a double top forming. On the other hand, we have the double bottom, where a security falls to a low, bounces, makes a lower low, and then rises above the previous low, creating a second bottom. This pattern indicates that the security's price trend is forming a support level and is likely to bounce back up. Let's look at some real-world examples. Suppose the price of Amazon stock reaches 100, then falls to 90, and makes a new high at 102, before falling back to 92. This forms a double top pattern, because it has a clear peak and a valley below. The double top in Amazon's chart was formed in 2020, where it reached 1,848, then fell to 1,500, and made a new high at 1,800 before falling back to 1,600. This is a more complex example, but the core idea remains the same. On the other hand, let's look at the Coca-Cola stock. Suppose the price falls to 50, then bounces to 52, makes a lower low at 45, before rising above 52. This would form a double bottom pattern, indicating that the security's price trend is forming a support level and is likely to bounce back up. The Coca-Cola stock indeed bounced back up from its double bottom in 2019, forming a strong uptrend. Now, let's talk about the common mistakes that beginners make when trying to spot double tops and bottoms. One of the biggest mistakes is looking for a precise second peak or valley. In reality, these patterns are more about the relationship between the high and the low, the slope of the rise and the fall, and the overall momentum of the market. Beginners tend to focus too much on the specific price levels and ignore the broader context. Another common mistake is trying to draw perfect lines or shapes on the chart. Remember, chart patterns are not about creating a perfect image, but rather about identifying the underlying trend and the potential for a reversal. Avoid being too focused on perfecting the patterns, and instead, look for the underlying momentum and the potential for a change in direction. Your homework for today is to practice identifying double tops and bottoms in real-world charts on any platform. Take your time to review the charts thoroughly, and draw them manually on a piece of paper. Take screenshots of a few examples, and annotate them to identify the peak and the valley, the slope of the rise and the fall, and any other key features that caught your attention. For example, you can take a screenshot of the Amazon chart from 2020 and mark the double top, the peak, and the valley. Here's a more specific exercise for you. Choose a stock that you're interested in, and find a double top or bottom in its chart. Then, calculate the percentage of the price movement between the peak and the valley. For example, if the peak is at 100 and the valley is at 90, the price movement is 10. If the double top or bottom happens near the price level of 50, and the movement is 5, it's more significant than if it happened at 150. Practice calculating these movements to get a better understanding of the pattern's significance. Remember, practice makes perfect, so make sure to review these charts thoroughly and take your time. If you've found this lesson helpful, please subscribe to our channel for more content, and see you in the next lesson, where we'll explore trend lines and their role in trading. Trading is not a guaranteed way to make money, and it involves risks. Always practice on demo accounts or paper trading journals before risking any real capital. We're here to guide you every step of the way, and we'll see you in the next lesson. Thank you for watching Trading Club 7U.